All right, let's jump into things. Where are we at? 12th of January 2025. So technically the second one did actually do a sort of analysis last week of it all, but didn't actually sort of make it to the upload of it all. But good to just sort of ease back into things, back from being overseas, and sort of gives us a chance to sort of get back and have a look at how the market's sort of been shaping up. I mean, look, that's the thing. I mean, obviously when you're trading in that, you never really sort of switch off from these sort of things. So it's not really so much of a sort of like, oh, I've got to completely bring myself up to speed. I mean, everybody knows US dollar is still absolutely crunching it to the top side there. Like, this move has just been just insane. I mean, look, really, I mean, obviously everybody knows it, but like from that little point where we had that 50 base point cut, it has just been a complete one-way trade. We had the, what's called the election sort of farce where they were sort of saying that Camilla was potentially going to have a shot of getting in there, which obviously it was never the chance. And really, it's just been a complete rip the whole way through. So I've what I did do last week was clear a couple of the charts because it was just like it's a bit tough than that. So like because there's a story, there's you know what I mean. There's a bit of a history behind these things as you're sort of looking at them, and obviously then. I mean, you get rid of it and it's like, oh, okay, but it just gets too clogged up and it's too much stuff on there. And, new year, new fresh outlook. So we can sort of jump into it a little bit more. But this was pretty much what I was kind of looking at sort of through last week. So I think this is the Monday. So this little sort of negative candle just here is sort of where we sort of closed the week. So obviously we had that sort of breakout into that sort of Friday close. Well, sorry, actually, it was the Thursday there, wasn't it? A little sort of bit of a pullback day on the Friday, and yeah, they're sort of coming back into the Monday. And basically, the story was, look, we had this nice little breakout point here, retest, coming back through here. I said, look, if you can get the breakthrough here and you can come through this channel, that's the second effort pushing down through this horizontal of 107.40s. That's what we could potentially be looking for to sort of see some sort of form of reversal. Obviously, it was shook a little bit, obviously, in the start of the week there. There was a couple of headlines out. I think so. I can't remember off the top of my head, but one of them was sort of about the tariffs being revisited or something to that effect. And then, you know what I mean? Perfect FX kind of sort of status of it all. Headline comes out, market freaks out, dumps the US dollar, and then sort of like, I think maybe 3 or 4 hours later, they come out with this, with Trump sort of saying, nah, that's not actually true. So it's just a quick little headline shaker, which seemed to come, every couple of months and that. So it is actually quite a sort of common sort of thing I've noticed. But anyhow, the main sort of uptrend channel for the time being is still holding. I did have this as the original channel sort of going back last year, so I think I will probably sort of delete this now. Look, I'm not particularly one. It doesn't have to hit channels like to the point. I mean, obviously, I've sort of called this the top side of this channel through here. You had the wick out the top, close back underneath, rejection coming back down through here. So I'm not sort of like you know what I mean. Not, it's got to be to the absolute point of it all. But after a while, that it kind of holds, it kind of doesn't. You get closes above, closes under. I think it kind of means, look, that's not what the market's looking at. So we can sort of delete that sort of rising support moving through there. And really, it's just this channel that we're looking at now. And again, this is quite a strong little support here. We've said this is a little buy zone where, we'd expect the sort of buyers to be giving it another shot. And look, this move still remains the same as last week in this sort of respect, if we are to see some sort of move to the downside. Like, I think even if we do get a bit of a sell down through here, you're going to see some sort of buying support and it's going to be coming up here. But interesting sort of thing of, I mean, I'll unpack it a little bit, but we had NFP obviously into the close of last week. I'll call up where we got the numbers here, but they did beat quite substantially. Just refresh this one. 227 previously revised down, as you just saw there, 227 down to 212. Expectation drop off of 164, down to 164, I should say. So, 60 odd thousand drop off. And then not only did it not drop off, but that actually sort of boosted and came up 256. It's quite a high sort of print. And if we look at the previous sort of ones, this is probably not the one that's going to show us. How do we get back off this? This one here. If you can compare it, you can. Here we go. all over the shop here. You can see it's quite a sort of strong number. I mean, back in October, we also got this big sort of surprise print here as well. Revised down a little bit the next month, and then there was that. This was that 1236 was around that Florida hurricane kind of sort of period, and that was kind of outlier sort of numbers there. But certainly, you can see both times that it's come in with these 200 plus numbers. Actually, we had it last in December as well. I didn't notice this one. Those previous times, they're quite big beats to the top side. You're expecting a bit of a slowdown here, and shocked and moved up to the top side. And this is October is actually when US dollar really started to rip. So if we just flip back onto that chart there, around this point down here, end of September, first week of October. So this is around that point that we had, that sort of big beat with the NFP numbers, and it's just been punching up the whole time. Like we actually, for what it's worth, had a little bit of a channel that we were working off down here as well, something to this sort of effect. But anyway, without sort of messing up the chart, it's been on a rip, and that's the thing at the moment. DXY is like obviously, they call it the wrecking ball for a reason, and it's just been churning and grinding all the way up through here. They did have strong economic data, and they are, like I said, comparatively doing a lot better than all the other options. I mean, the pound got smashed this week. Euro's just been woeful. Euro must almost be down to parity here, 102.44 I'm seeing right here. So, that has been absolutely hammered. And of course, Euro making up the majority sort of stake of the DXY. It's no wonder with it sort of keeping moving up to the top side here. But point I'm getting to with this is that it's just it's not necessarily that the US is so super outperforming. Yes, the NFP was quite a strong number, but again, another one to sort of put a pin in that is that this was the last print that we had in under Biden's reign. So, there was some sort of thoughts that maybe, the numbers might be a little bit fudged to sort of go out on a high and make things look a little bit better than maybe they even potentially could. I know it's a little bit, tinfoil hat sort of outlook on things, but who knows? Anyway, we'll see how that gets revised down next month. But it's just main thing is that there's not a lot of other options out there. I mean, the BOJ, they're just not coming to the party. They just keep sort of going, oh, we might raise. Actually, hold on, wait, no, let's think about it a bit more. We might raise. No, let's see, and it just goes back and forth. There's nothing concrete there. So yen continues to be under pressure, still obviously sort of not taking away any of the strength from the US dollar. Pound is just getting absolutely slaughtered. Aussie not part of DXY, but also getting hammered. But Euro also, all these other ones that are sort of should be sort of pushing against the US dollar, they're all coming out, weak home data, like from their own central banks and that. And the US dollar is basically just, the leading by default in that sort of respect. So yeah, look, I mean, these moves can't continue forever, but we have broken some very key levels, and it is still moving up. If closed on a very strong number, but I'll get down into the lower time frame in a moment, so we can work out something that we can actually sort of possibly trade off. But it moved up, but as you can see here, it is potentially working to some little wedge. I mean, we'll have to sort of see how things open up sort of come the new week, but we are sort of seeing obviously this move come up through the top here. So obviously through here at the same time that RSI is not really sort of showing a sort of supportive at all. See how it goes through this week. I mean, look, as far as this sort of works in the sense of here's your resistance, your most immediate resistance, broke through, it finished and closed in breakout territory. But this is a third touch pretty well on the line through here, which is starting to really give us a little bit of a wedge sort of setup. And look, the wedge setup doesn't mean that obviously, look, it's a full turnaround, but should we, start to see this play out, this would be something we could potentially be looking for a measured move. And that would obviously come from your break, depending on where your break sort of would come through here. But, this could be something that brings you back down. Back down to the 105s and that, should we see a break of this channel. So the thing with the measured moves, okay, negative divergence, obviously, yes, getting ready for a bit of a sort of potential, I should say, before I get ahead of myself, getting ready for a potential sort of turnaround. Um, it's one of the things, one of the parts of the piece of the puzzle that you sort of put in together. It's not like, okay, this negative divergence, because this could just close, as I said, in this sort of respect here, it has closed in a breakout. So if this continues and we sort of see a run early in Asia tomorrow, basically on the Monday through the session now, um, we could see this RSI tip, actually cross over because it's about to cross over at the moment, and that continues and pushes back up, and then you'd probably be looking for a continuation to the top of the channel, and that'll take you up probably 111-ish in change, depending on how fast you come up there, 111, 111.30. If it does happen to turn around, if it does break through that sort of Friday's lows where we've got this little alert sort of set up to here already, then you start to look for, okay, well, there's a failure to complete this sort of channel to the top side. That's the first indicator. You've got rising wedge, second indicator, and you've got an RSI with a negative divergence into this top area over here. So that's three sort of indicators showing you that we could potentially be seeing a little bit of a sort of a cooling. I'm not going to say a top in the US dollar, um, but it does mean that you could be starting to see some sort of reprieve. And if that were to be the case, then we're starting to look, okay, where are these fib lines? What do they line up with? We've got our measured move from potentially this wedge, if this were to sort of come to play out, back down to 105. And as you can see, this lines up almost sort of, obviously this depends on where you break out of this sort of rising support, but the measured move also comes pretty much perfectly in line, 105 round number, and also the 50% retracement of that move from back in end of September. So it's been a while now. So it has been absolutely sort of ripping with it all. So look, I mean, I've tried to sort of say, here we go, we're getting to the top a couple of times, and a couple of times worked well, but it is still wrecking ball status, and very much in breakout mode. So I think, look, I wouldn't be surprised if we do see a sort of a bit of a cooling, given this wedge and the negative divergence. But I think the real test is going to be the second touch down through 107.60, maybe a bounce retest of the underside of that sort of rising support of this channel. But if you get a second run down through there, I think that's when we can start to go, okay, draw out the lines, look where the pullback's coming to, and this could be leg one, leg two into a much larger move, leg three, but certainly give you a little bit of, maybe a week or two or so of US dollar sort of cooling. But really, for this to be happening and sort of coming into effect, I mean, that's the technical side of what we need to see, but realistically, you need the fundamentals and that to see lining up. And this means that it's almost sort of like US dollar. I mean, this is obviously the basket, so it is the US dollar against the other major currencies in that, but it really is US dollar almost against the world in the sense that you need the Eurozone to be picking up its game. You need, the pound to be playing its part. You need the BOJ to say, hey, look, you know what, we need to sort of raise rates. If you've got weak competitors on everything, this is the result, and we see US dollar just continue to cruise to the top side and keep grinding higher and higher. But I think, look, there is an argument for a potential little bit of a pullback, but again, there's no point being the first one to the party. But this little wedge where it did actually stop is worth noting because that gives us three touches to the top side there. If we get onto a lower time frame, you can see that sort of like obviously this is the NFP and it just exploded through here, and just like obviously shot straight up, a little bit of a pullback to it all, and unable to see complete strong continuation up there. But as I sort of say, the last couple of hours of the last couple of hours of the week and that, the 4 hour and that, don't really worry a great deal about. So I'll just get on to put these here on this. And this. Boom. So we could see some sort of little roll through here, but I mean, look, there's a lot of factors lining up for the to sort of say this could be going a little bit higher still. I think we have got US CPI this week as well. From what I saw, actually, again, I've got to sort of bring myself up to speed a little bit more with actually what's going on with the news, but did see one article sort of saying that they were potentially at some stage pricing for four cuts through 2025. That's now dropped down to two. So, what I mean, if inflation stays sort of low, then there is a chance that, that really sort of takes that off, that sort of cements the idea of only two cuts through the whole year, which obviously is the thing that will keep US dollar probably relatively bid for the time being anyway. So let's put this into a zone. So yeah, I think certainly, look, this would be the support you want to sort of come down through. There are a couple of levels through here. I wouldn't be surprised if we see an early sort of maybe a quick little sell down early Asia. But certainly I wouldn't be surprised if we see it stay up around this top area for a little while. Down underneath this zone through here. Then we start to look back down. Put that alert just down under this, underneath that support there. Then we start to look down towards 106, 107.60, and see how the market kind of reacts from that point as well. All right, so let's flip along. So DXY just it has been the trade for the last couple of months and that, so people have caught that very nicely done. Gold. Gold has actually sort of made an effort to sort of come out through here, and as you can see, same with the last chart, and I sort of the wiped out my gold charts, so saying goodbye to a few of those ones there, and I drew out this triangle. So obviously, very much at the top side over here, we've been consolidating. Realistically, again, since back sort of October, so and that incredible sort of sell down there, bounces, boom, 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 all the way through. So it hasn't really been doing much. I was looking at one stage for a head and shoulders one way, head and shoulders the other way. Both of them just got negated, and it's just really just, as you can see, just turned into this little grind through here. The fact that it closed where it did, I think is not too bad for gold bulls here, because we're through this little sort of falling resistance. And this is what I was saying through here, a little breakthrough here. I think the big test here is going to be 107.20. I mean, realistically, we're not too far off at the moment. Where's that little measure? Till where are we at? Yeah, 3% off. And that's the thing, as I said, this is from last week. So where's the Monday session there? This is where we were last week when I did that other analysis. So down to here. So, so look, we're only 6% off. Now we're only 3% off. Well, 3.7 or so, but certainly within striking distance of all new highs. And this is the thing that I've been saying with gold for a while, is that despite US dollar strength being so up the top end and ripping through, gold has been holding its own. Yeah, we've had some big sell downs. I mean, if you look at this move down here, well, we dropped by 9%. I think, yeah, it was 9%, 9.14 there, $255 move, massive move to the downside there. But all in all, you know what I mean? You could also see gold back down sort of 2,300. I've seen people calling much lower than that as well. Certainly with the way that US dollar has been running the last couple of months, gold has really just been holding its own up in the top end here. So this is more or less just a consolidation period where you could potentially be seeing some sort of breakout. And this would be the sort of kind of the move you'd be looking for. If we get rid of this, one now. Oh, well, this is obviously sort of forward thinking of it all, but I mean, this is pretty much where you'd kind of be looking from that. Actually, no, maybe more the depth of this triangle. I'm not, yeah. What if we went here? Certainly, anyway. Look, I think there's potential for some upside of these moves here, and I think this could definitely get you up in the 2900s. I think that's a bit more reasonable than that long move up to the top side over there. So certainly, if we break new highs, I think sort of you've got a good $150 squeeze move up to the top side there. First step at the moment is obviously breaking through this. You want to see it hold to the top side. But as I was saying, it's sort of even though sort of US dollar's been on the rip, a lot of capital has been flowing into that. It's been coming from all the other currencies. It hasn't been coming from the metals. People are still holding on to their metal profits. They're still holding on to their positions. So if these people are still buying gold, despite US dollar being such a good option, in at least the last 3 months, and then US dollar starts to sell off, that money's going to flow not only back into the currencies as well, but it's always a good inverse relationship, typically 90-10 at the time, to go back into gold. So if we see US dollar sell off and gold's already been bid, I would expect that to really sort of be the catalyst that gets us to a breakout, and we could be looking up into 2900s. But I think for the time being, obviously, yes, consolidating. First target is about that 2720. If you can get above there, obviously we've got this larger sort of zone through the top side over here. This must be on a weekly or a daily. I think I put that in. This little level up through here. And I think sort of like, yeah, if you can get sort of through 2720, then you're kind of looking up around that sort of like, 2760s, maybe a test of the all-time highs, but that's, yeah, that, I mean, all new high, all-time high, and that's what's going to be the catalyst. But I definitely see upside in gold in the next couple of months. All right, silver has been holding its own, got beaten down a lot, so which this one's obviously still pretty messy. Yeah, so this was the move through last week. Well, that I drew out through last week. Sort of saying that, look, we had this little consolidation area. So where were we on the Monday last week? Was probably up around here, was it? Just checking the phone. So about to see. So yeah, coming up, sort of testing. Whoop. Testing top side of this little range here. So I've seen a lot of people calling these head and shoulder moves and that, and I did draw this out, sort of saying, look, should that sort of happen to play out, well, this is you move down here 25 or so. But as we sort of say, with the structure, you've got your three legs. You've got, the first leg, we're back up. The third leg's the important one, this one here, because this is the one that's going to give you continuation, higher low, double bottom. Double bottom and also higher low are the ones that are going to get us this kind of sort of reversal move back up through here. It's been grinding. I mean, there haven't been any sort of like big solid breaking moves, but it is still grinding up through here. So falling resistance, I think, is probably sort of maybe the next sort of key. But as I said, with this little area zone kind of range through here that it was kind of in, with the double bottom actually, not so much of a range because we only really had, excuse me, two touches down here, but that little double bottom measured move gives you back up above 31. So probably about another 80-cent move to the top side over here. And then again, you could probably expect a little bit of sort of some selling to come in there. I think above that level, obviously we got some other horizontals here, which we could probably mark up a little bit now and expect a little bit of a sell down through these zones. But I guess also sort of like if gold pushes on, I'd expect it to drag silver as well. So I think this look, we're a little bit hot. This is on the daily now. We're a little bit hot on the RSI, and does look like it's tipping in. I don't like that there's so many top wicks here, to be honest. It doesn't give me a whole great deal of confidence. I'm just having a look back at a couple of these other periods where we had a whole bunch of wicks down here and bang, sell down, shake down kind of thing. But yeah, all these top wicks don't fill me with a lot of confidence. But again, US dollar ripped up and closed strong on the week, on the Friday, and metals are kind of going, okay, that's fine. You do your thing, we'll do ours. And they've also sort of pushed out to the top side here. So we did see, obviously, a little bit of a shake in that moment when NFP came out, but it very much sort of recovered the majority of that move. Actually, I think this is where we, through this area through here. Just put back onto gold real quickly, because if you have a look at this through the period where this is where the data dropped, they sold it down and then bang, straight back up and actually sort of pushed out to the top side another 15 bucks. So tested up near that 2700 round level. So metals very much ignoring the US dollar strength at the moment, which is another thing that makes me think that sort of like, maybe the metal market is trying to think of a better word than sophisticated, but maybe they're a little bit sophisticated and they know a little bit more, and they're thinking, okay, well, you know what? Doesn't matter if US dollars getting these sort of fudge strong numbers. It's going to see a turn soon. The capital is going to flow into metals. We don't want to be sort of taking our profit at the moment, and they're obviously still bidding the metals, despite the US dollar having quite a strong sort of close to the week. So yeah, look, I think we've still got a little bit of an upside here. 31.26 around that sort of price target for that double bottom, I think is probably something to be looking for on say Monday, Tuesday this week, if we don't just get a little bit of a shakeout first. And put onto the sorry sack of the market, Aussie. Oh, jeez. This is one of the trades that is, I have to admit, I got on the wrong side of this one. I was shorting it through this period through here, and I thought around this sort of, where was it? Around No, actually, so where we at? So 69 was that period there, yeah. So I thought we'd get this big turn coming up through here. We had that post-election rip up here, 127%. I think that move was through there. So if we have a look at, for what it's worth, back here, this was the election drop down. There's the move, and as you can see, it really performed very well the moment afterwards. This was the election, and bang, 127%. Through the next day, and it's just been one direction since. It is just cannot get out of its own way. I think it's probably about 9% or something. It's 9 or 10% or something. It's a big drop down from the highs of so October. So basically, yeah, 11% in 3 months. Absolutely shocking. And as you can see, it was trying to hold this sort of zone. It's been a bit quiet through this period here because obviously, Christmas, New Year's, this kind of stuff, low volumes. But a couple of attempts early through last week. I think this was the headlines actually that came out. And Aussie, bang, that was a favour. They sold off US dollar and everything got a little bit of a bid, but Aussie really kind of took off, as you can see, that little sort of falling resistance through this area. Bang, bang, but came into contact with the top. Let's get this out of the way. Came into contact with the top of that channel, which is also the horizontal lows. So from back in October 23. So breaking a key level there, and obviously still holding as a bit of resistance now as well, and absolutely closing on a shocking note. Absolute shocking note. So tried to bounce back up through this area to get back in there. Unable to sort of continue down, but again, last couple of hours of the week you kind of ignore. So unless it can sort of get back up, I mean, look, above 63 is where it needs, but at least in the short term, back up above 62.20, I think is an area where you could see a little bit of recovery through it all. But look, again, this on the 4 hour, RSI is looking shocking. Looks like it wants to push a little bit lower. Um, it was pushing up here for a second, but of course, closing on that rubbish end of the week. Look, RSI is very much, it's tipped over. It's broken that immediate support. There is not a lot of support horizontally sort of down through here as well. They were the very big lows from, what's that? October 22. So yeah, at the moment, we have to go back to, wow, back to April 2020. So, we're coming up, geez, 5-year lows. So yeah, Aussie very much getting absolutely slaughtered here at the moment. So yeah, look, there's not a lot to sort of say about it. I mean, there's talk about the RBA bringing forward the cuts coming into Feb. Interesting to see how the market will react to that because a couple of times recently we've seen that the market on cuts has actually had a bit of the inverse reaction to the textbook kind of thing. Like you may get that initial drop down, but very much priced in with it all. We saw it with DXY, as I showed a moment ago. Same thing happened with the RBNZ. Same thing happened with I think BOC as well. Where they actually had the cuts and then they actually saw it appreciate afterwards. So very much a sort of buy the rumor, sell the news kind of thing. So maybe the cuts coming a little bit sooner if they do come. February was where it was tipped. Maybe something to sort of keep an eye on. But at the moment, from a technical standpoint, looks shocking. It's broken through the supports, closed on the lows. RSI is rolling. Weekly super very over. I mean, look at this on a weekly. This is what 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12, 13, 14, 15. 15 weeks straight with one little pump up just post election, as I showed a moment ago. And really, it's just 15 weeks of just an absolute bloodbath for Aussie. One thing with these kind of sell downs, or at least these kind of moves, and that generally when you see them just in one quick direction, you can see these things very much V-shape a lot. It's not really see through these areas. They're chopping, changing, up and down, chop over like this kind of thing. Very fast sell down, very fast back up. So there is a chance that you could, once this does turn, once it gets out of that channel, we could see some reprieve. As to where that comes, though, it's a bit hard to tell. Home data of Aussie is not supportive of anything particularly great at the moment, or Aussie dollar strength wise. The data, look, the I think the employment rate is about the only thing that's really coming out well with us. Retail sales are down. Um, well, we had CPI that's also down. I mean, good for I guess inflation aspect of sort of stuff. But in terms of what we're looking at here with the Aussie dollar strength, this isn't what you're looking for. Not by any means. So a lot of this is the US dollar strength move, but it has started being a two-pronged, and that's the thing with Aussie. It's a two-pronged approach. If you've got strong US dollar, well, relative strong US dollar data, and then you've got weak Aussie on top of that, then that's what gives that's what gives you 11% in 15 weeks, which is an absolute bloodbath. So yeah, I'll have to sort of wait to sort of see what they do with Asia as it opens up. We do have a bit of data for Aussie this week as well. I think we had CPI last week. What do we have here? This is point to sort of go through the news anyway. Aussie wise, at least, where is it? Employment, yeah. So employment rate. So 3.9 up to 4%. I must have missed the last print of this one, but again, sort of these numbers still being quite strong. So this is another thing that's added into it, December 12th and that. This is just before I sort of went away. But these numbers moving up is what will keep US dollar, will keep Aussie dollar a little bit more bid. 3.9, obviously looking up to 4%. I don't know if this will reflect so much. I suppose they're always a month behind, aren't they? So these numbers should be reflecting the December period. Maybe that'll sort of be adding into a little bit higher of employment in. So it's just I must have missed all this data. A little bit higher of employment through the Christmas period. So we'll have to sort of see how this sort of plays out this week. But certainly if we get a low number here, that is not going to be good for Aussie. The flip side of these things, look, if we pump back up into a 30, 35,000, 40,000 plus employment, because of, again, as I said, if that does reflect in the Christmas time sort of hiring, and we see the sort of unemployment rate sort of, a little bit lower, I think they want it to, sorry, a little bit, so bear with 1 sec. Yeah, cool. It's absolutely sweltering here. So if we see that sort of unemployment rate sort of moving down and employment moving up, they're the kind of things you'd be looking at to sort of see probably a little bit of a stronger or a bit more of a bid in the Aussie dollar. But yeah, certainly at the moment, it's very much on the ropes. So maybe that's near some sort of capitulation area, and then you'd see some sort of reversal. But for now, looking very shocking, and it could be looking at down into 60 cent. 60 cent test. If it gets a 5 handle in front of it, boof, watch out. 59. That'd be very, very rough for the Aussie. But anyway, so moving back on with it all, a couple of other things going to get the Aussie moving as we see China sort of push back a little bit. They have been incredibly weak, as everybody's probably quite well aware. If China can sort of get their stuff back into gear, get back onto the charts, have a look at where we are, the 10-year yields on China. Like I've covered this a few times, but this just shows absolute zero confidence in China whatsoever. So yeah, if we could see a little bit of reversal here, it is heavily oversold now. It's just been a one-way sort of move down here. If we can see China recover, that's another thing that's going to be adding into the sort of Aussie strength. On that as well, we'll just flip on to sort of copper because look, copper did have quite a strong week this week, and if we get on a lower time frame, I'll sort of show this was the call that I had through last week, and I was like saying, look, if we could, where were we? I think it was back down here. Yeah, so this is where the analysis was last week. I was like, look, this is the zone. We get through here. Look, wait for this for your back tests. It was a good little 3% move up through this period here. Obviously did that and actually overshot that a little bit there as well. So it was actually quite a strong week. At its best was sitting around 7% for the week. So quite a strong sort of move in copper, but even despite copper getting a little bit of a kick up, Aussie's still not responding. So I think there's some more sort of deep-seated sort of things with Aussie at the moment, but certainly it's just perplexing how bad this sell-off in Aussie has been. I've just personally I've never seen something as drastic as this. It's yeah, 15 weeks straight, pretty much, sort of getting smacked back down there. So yeah, that's something to have a look at. I think on all these sort of things as well, we've got China. So China is, well, the yuan is really testing these, upper resistance areas here. So the thought behind this sort of stuff is that, the tariffs that are going to be potentially coming in from Trump, obviously going to be quite strong, hard on China. The idea is that, in 2016, when they did that, China let the yuan depreciate as a sort of way to sort of combat the tariffs. But my feeling is that China's not in the same position as they were in 2016. 2016, they were kicking along. I can't remember what chart I was looking at the other day, but it was like, I think maybe GDP growth or something like this. And, it was like sort of, moving up, boom, boom, like this last time. Very, very rough sort of drawing. Anyway, as it is this time, it's moving up, bang, 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 and it's kind of just fizzled off. So, yeah, but I mean, that's a very poor sort of drawing of the two charts. But the idea is that it was on a very strong trajectory last time, as Trump was coming in. This time, it's kind of more flatlined, and obviously sort of teetered off a bit. So it's not the same threat, well, threat to the US as it was in 2016. So I don't know if that calls for the same sort of drastic response that they had in 2016. He's obviously, Trump likes to talk tough and that, and China's the big sort of like boogeyman kind of thing at the moment. But I think this is why we've been seeing this continued weakening with the yuan and that. I mean, China seems to forever, it's an odd one because it forever seems to be sort of like having immense troubles and, all this sort of stuff. But then you sort of see what they're doing with their technology. You see what they're doing with their cities. And they're certainly not sort of, like, I know they're the second biggest economy in the world, but like they're not puttering along. They've got large innovation, they've got a lot of money being pumped into things, and they're at the cutting edge of a lot of stuff. So I think it's a little, like, honestly, I mean, the market doesn't care what you think, but like it seems like it's a little bit overblown as to how bad it is over there. But you know what, you got to trade what you see on the market, and I think that this is kind of pricing in the idea of what he'll do with that being Trump, sort of with the tariffs. However, I don't know if it's going to yield the same response as it had last time, and if it does, how much of this is pricing that? You know what I mean? As I said, like it was talk from last time, I think it was like 11% or something. Um, 1% could even be more actually. 15%. I have to go back and have a look, but regardless of it all, maybe 10 or 12. Look, call it 12%, and call 12% from the lows. Well, that's the move there. You know what I mean? And if that was to sort of say that they've been pricing it since September with that US dollar strength, move that to over here and say they'd only be pricing it partly, you're looking up around 8. So, this is why people would be very worried, and this is obviously what's been weighing on the Aussie as well. So they all fit together. They're all the sort of the flows of these things. And if Aussie wants to do a little bit better, you need China to be having, well, you need the market to be having a little bit more confidence in China, and that they're not just going to let their currency blow right out. Certainly, I don't think that it's, well, not that I don't think it's not a great thing for a currency to let themselves just go like that. It's obviously seen as quite a sort of a dirty tactic with it all. But you know what I mean, with these kind of tariffs, if they are actually do turn out to be the kind of numbers that he's talking, that's kind of a bit of a dirty tactic with it all as well. So it'll be nice once the inauguration's done and we can hopefully sort of settle into some sort of normal routine and give us some sort of like actual so not so, I mean, everything's always a little bit of speculation, but not so much just like, oh, what's going to happen, let's price it all in, let's price it all in. Um, and yeah, we can go from there. But anyway, look, that's a sort of bigger picture. The idea at the moment, I guess, is really just a quick glance. There's sort of rising support. It's pulled away from this. It's actually sort of made another little one kind of coming up through here. No, I'm not really a big fan of that. If anything, it would have been these supports through here. Look, I think sort of, if anything, we see a little bit of a dip back down to 103.30, but till you get underneath this kind of horizontal over here, where I've got that a little alert set up, it's very much sticking up in this top end over here. So we can see that this is really like an area in which, the market has intervened quite strongly. previously. I mean, this is going back, well, this is just back in 22. Let's put it on daily. But you can see this sell down from these levels over here. I mean, we're talking about a big sell down with Aussie. There's a 9% sell down through the one from this level. Obviously, we've seen them try to sort of knock it back down from here a couple of times. So this is an area that they're obviously watching. So if it does pop through here, it could mean that it's going to go a little bit higher. We have sort of got this little bit of a sort of wedge. Obviously, I must have put this in last week, sort of really grinding up into the top end over here. So I think a breakout above here is going to be very bad for Aussie. And I think we're going to see quite a large sort of continuation if we do see a break from this level up the top over here. But as you can see, it's really just grinding and pushing up in here. It's just waiting for a catalyst. But certainly downside, I would say sort of 722 would be your sort of larger kind of move you'd be looking for. But I think, as I said, if it stays above that, then I think really we're just going to be seeing it grind around this top end, 722 to 736. There's still a bit of a range for all that's. Oh yeah, that's 2%, which doesn't sound like a lot, but that's how a one moves. It just, as you can see, it just grinds really. All right, so I think that's pretty much it in terms of the charts. Have a quick look at the gold silver ratio. Yeah, rejected back from this higher resistance level. It is holding on to these kind of little lower supports that we had through here. Obviously, it didn't wipe out this one over here, this chart. So I'll probably sort of clear up a couple of these things through the week as well, and just maintain a couple of these more sort of high time frame sort of supports and that for the lower areas, and obviously this resistance area through here, and sort of see how we can sort of make use of this. But I think for the moment, you can see that obviously, they're trying to hold this little support here area through here. Quite a strong week, because I think it was, where do we start? So this is the Monday. So yeah, down and then sort of ground through here. But I think a break below, say, 87, could actually sort of see a nice little leg down from the top up here, if we don't see it just bounce back up to the top side over here. So have to, as usual, just sort of see how Monday kind of opens up and how the market sort of gets underway. Quickly, just on what news we do have. Monday, we had a bit of China data out, I think. So we got trade balance looking like a little bit of an increase through there. Again, stronger economic data, stronger, a little bit more trust in the yuan. This will have that sort of effect, obviously strengthening the yuan, as I said, and we might see a little bit of a flow over with the Aussie reprieve if these numbers come in a little bit stronger, and obviously inverse on a weaker lot of numbers. Moving through Tuesday, that's about it. Excuse me, that's about it through Monday. We got job advertisements on Monday as well for ANZ. We got inflation gauge. No, nothing that really I've sort of, in my opinion, is going to like sort of really move the market. But again, they're little pieces of the puzzle that we can sort of pop in there. Tuesday, we've got a bit of yen news. Nothing of note. I think Tuesday night, well, technically Wednesday morning there at 12:30. PPI, so the producer price index, they're looking to come in pretty flat. And these are the kind of numbers we're going to be starting to look for to sort of see if inflation is going to be an issue with the US dollar. And higher numbers with these, because obviously this is the producer price index, so this is like further upstream from the CPI, the consumer price index. So if they're seeing inflation on their end of stuff, there's the idea that that's going to trickle down, pushing CPI higher. CPI higher means that, okay, we may need to hold the rates for higher for longer. Strength continues with the US dollar. So that'll be one to sort of watch through there. We got the CPI coming in 2.6 from UK on Wednesday. Not a big one. I don't really look at the sort of pound data in that so much, but as I said, the pound's been getting absolutely hammered. So that's something to keep an eye on. But more or less than that, you're seeing a lot of these, the sort of G10 currencies and that really back down into their target zones in terms of sort of their inflation. This one, Forex Factory, only gives you part of the data as well. So these just gives you like generally your CPI. I don't think they give the core and that. Well, it doesn't seem to. I don't think it gives us the core with Aussie, perhaps, because obviously we got the core number down here. So once you sort of strip away a couple of little bits and pieces, you can see that the inflation there is still a little bit of a sort of above target, 2 to 3% being the target. But CPI, which is kind of the headline figure, I think people sort of go like, okay, well, this is getting down into our 2 to 3% band. Okay, maybe you can sort of ease off on the rates a little bit. Um, just yet another thing. As I said, I don't trade pound, so it is one of the things that would be sort of weighing on it so much at the moment. Moving along, we don't have a great deal through here. You got French CPI. Okay, so CPI out of the US. So this is the one that we're going to really be looking at. So you got PPI, yes, that's part of it all. CPI is a lot more of a market mover. 2.7 and 2.9 expectation. So the thing with this is if we see the CPI pump up, it means that, okay, they did the 50 and then their 25 base point cuts. So actually, keeping in mind as well, when I was just on what I was talking before with the inverse reactions for these rate cuts, the 25% rate cut on US dollar also sent it higher. And I don't think they're even technically, I think they were pricing for a 25 as well. But anyway, the point being here is if inflation turns out to be a little bit of a problem, as in it starts to tick back up, then that's going to be an argument for the side of holding rates for higher for longer, means that the US dollar stays bid for longer. So if we have a look at the last couple of months, as I said, it got down 2.5, 2.3 expectation, no, 2.4 it got to in October, and it's ticked up 2.6, 2.7, now looking at 2.9. So that's 4 months of 4 months of sort of like growth, inflation increasing kind of thing. So yeah, that's certainly one to look for. Flip side of that, if they find out for whatever reason maybe it's not as big an issue, I don't think that'll be the case. Actually, I think they will get a high print. That could sort of see a little bit of a softening of the US dollar. As I mentioned earlier, and then you could be looking for that channel test or channel break potentially. I don't think that's going to be the thing that's going to be the one that sort of shakes it out. But again, it's CPI is what I call the second tier data, and you had NFP is the other second tier data, only behind FOMC. And NFP was strong, CPI strong. You know what I mean? Things are starting to line up for a little bit of a continued strength in US dollar, at least in the short to medium term. Another thing as well, just on that with oil, oil's also actually been picking up a little bit as well. So there's a lot of talk about that sort of higher prices with oil coming in. That's also going to be another thing that feeds into a little bit of higher inflation. It will be a little bit of a sort of a lagging sort of thing, and oil's only really just taken off the last couple of weeks. So I don't know if that would be reflected in any sort of data or numbers as of yet. Thursday morning, Aussie inflation expectation 4.2%. Well, I mean, again, it's not going to be something to super move the market, but it is something that sort of like could definitely sort of be plugged in there because again, like what the RBA is looking for is they're looking for Bullock. I'm going to say RBA, but really Bullock was saying that they wanted 2 quarterly numbers with the inflation down inside the band. They haven't got that. There's all these other parts, and it's not just okay. One thing happens here, one thing happens here. Yes, they can cut. And it's not like, okay, just because they say it one time, you need to get that till it won't. You can only go off what they've said. And that's what she said sort of coming into the end of the year, that was the big thing that she was kind of looking for. We haven't had that yet. So, you know what I mean? It would stand to reason that, maybe the cuts could still be coming around sorry, that the cuts still could be sort of coming around that sort of maybe mid-year kind of period. But again, you just got to go off what the data comes out and sort of plug it in. But yeah, certainly I think sort of as I covered before, the employment numbers, I think this will be the big Aussie mover. So Thursday morning, 11:30, that'll be the one that's going to move Aussie for the week. And then moving on Friday, we got retail sales for the US. Fairly low numbers with this. Again, stronger numbers means there's more disposable and looking to tick up, at least the core is looking to tick up here. Stronger numbers means people still got money, means they're not hurting, means we can keep the rates higher for longer. That's the play out. with it there. So a higher number here, strength for the US dollar. Um, Manufacturing, still weak numbers down over here, but again, looking to move in a positive direction. And then finishing up the week, so nothing actually, so that's Friday morning. So still getting my bearings with the times and that. Bit of China data, sort of through the day on Friday, and then pretty quiet, I think, to sort of close out the week next week. So, yeah, a few big pits in that. I think CPI for the US is going to be the big number, and I think employment data for Aussie are going to be the ones that are going to move it. All right, that's it from me.